Leonard-Monrad, and it's about the power of lending circles, the Mission Asset Fund. Mission Asset Fund is a nonprofit organization on a mission to create a fair financial marketplace for hardworking families. Over the past decade, they have developed programs with the strength of low-income and for low-income and immigrant communities. They have a lending circle program that has a zero interest loan rate.
Yay!
I'll leave you with that.
Okay, I'll fill in the gaps. I guess Jim is done. So, known Zoe now for a couple of years. We've been with Mission Asset Fund for several years. And we've actually, where I work, we've been working with Mission Asset Fund for now almost 5 years. I looked it up this morning, it's almost 5 years. And we've done a couple $100,000 worth of, almost a couple $100,000 worth of very small loans. There's no interest, no fees. Zoe will tell you about it. Wonderful opportunity for people to build assets and enhance credit, and I won't take her thunder. So Zoe.
Great, thank you. First and foremost, thank you so much for having me, and especially to Rob for inviting me. I am with the Mission Asset Fund. We are based in the Mission District of San Francisco, hence the name. It's not a bunch of buzzwords thrown together. Oftentimes I get that. My name is Zoe Leonard-Monrad. There. And so, as both Jim and Rob mentioned, we are a nonprofit organization on a mission to create a fair financial marketplace for hardworking families. And we got our start, in the Mission District about 12 or so years ago. There are 3 values that really underpin all of our work. And we're really hoping to flip the narrative around how people think about poor people and what that looks like. So we go to our clients and really with this community-centered approach. So everything that we do is focus on the community. So first and foremost, respecting people for where they are, not necessarily where we think they should be or they could be, meeting people where they are, and building on their strengths. So building on what's already good in their lives to uplift that and to continue to grow upon that. So as I mentioned, we got our start in the Mission District about 12 years ago. At that point, we surveyed our community and found that roughly half were unbanked or underbanked. So roughly half of the people in our community didn't have a checking account or a savings account. Similarly, a huge portion were credit invisible, so they didn't have a credit score or a credit history in any form. So unfortunately, that's not unique to our little subset of the neighborhood. There are 1 in 5 individuals throughout the United States that are credit invisible. So oftentimes people aren't visible to mainstream financial services, aren't necessarily being able to access those because of a variety of barriers. That's exacerbated because even though we've had great economic growth, there's lots of wage stagnation. So people are kind of trapped in low-wage work, not able to advance in that way. And there was a study that found that for low-income folks, people are spending 9.5% of their income on just fees and interest. So really strapped. Oftentimes folks that are in maybe the most vulnerable situations end up paying even more for the services that they're going to receive. So oftentimes when people aren't able to access mainstream financial services, they'll look to the resources that are available to them. So that's friends, family, social networks. So there's this practice of social lending that's a global practice. It exists all around the world, any of these variety of names. Is anyone familiar with any of the names on these slides? Okay, yeah?
Halawagan is Tagalog.
Halawagan in the Philippines?
That's Tagalog.
Yep, exactly. I love doing presentations. Yep, like this, because oftentimes there will be someone in the room that's familiar with it, or they'll say, hey, actually in my culture we call it X, Y, or Z. So it's a practice that literally takes place all over the world and has been true for generations. And so people coming together to borrow and lend money from one another. And what we did at Mission Asset Fund is take this practice that is usually just with friends and family, and so oftentimes invisible to mainstream systems, and making it visible. So what we've done is taking this social lending and made it a product in the United States called lending circles. So what we're doing is recognizing and formalizing a practice that already exists, uplifting the practices that people are already participating in, so that people can literally get credit for things they're already doing. So what we do is oftentimes when people participate in that social lending, they're just doing it with friends and family. And so if someone that's not things that they're able to report to, hey, look at I want to apply for an auto loan, look at this loan I have with my friends and family. That's not something that banks recognize. So what we do is we take this activity and report it to all 3 major credit bureaus. Also, we are securing the loan, so we make it, so 0% interest, but we also make it secure, so if anyone were to drop out or comes across another financial situation, that won't impact other people in the group. So if you're doing it with friends and family, if your auntie walks away with the money, there's no safeguard necessarily for that. The safeguard is that trust, as saying, hey, you're my aunt, can you not take my money? But none beyond that. So what we've done is as an institution, we'll step in and cover that cost so the other people in the group won't be impacted. Similarly, all of our products come with financial education, so not just giving a loan, also giving the opportunity to continue to learn, and we have a variety of financial education resources and modules that people will take. And also make sure that our payments are accessible in people's lives. So we do all of our payments electronically, so people don't need to think about writing a check at a certain time. It'll just get automatically from their account. So how lending circles actually work is, so there's a group of 8 people. They each decide to contribute $100 each month. So that makes a pot of $800. The first month, the first woman, so say in January, she gets the $800 pot. The next month, everyone puts $100 into the pot, that creates an $800 pot, and then the next gentleman gets the $800. And this will go on until everyone in the circle has had a turn. Does that make sense? And seeing people? Okay. So this is the practice that Palawagans are, that Tandas are, that people are already familiar with. And what we've done, as I mentioned, is formalized it. So all of our participants sign a loan agreement, which allows us to report to the 3 major credit bureaus. And so what we found is that this was really a turning point in people's lives. So for people that were a part of our Lending Circles program, 84% of those that started off without a credit history or were credit invisible were able to build a credit score for their first time after also, we see 168 point average growth. So oftentimes most for folks that will come in without a credit history or maybe a really low credit history, and obviously that'll vary, but we're seeing really large growth from that. And also people are able to really build upon that. So people who participate in a lending circle will 8% go on to take out a mortgage or an auto loan. And even more so in their first lending circle, and even more so will go on to do that later down the line. So really our goal is to set people up for success to be able to then go participate in bigger and bolder financial opportunities. So our Lending Circles program is our kind of signature program. It's that 0% interest loan to help people build credit, savings, community. But we've also, in an effort to continue to meet our community where they're at, have 2 other loan programs. So first, immigration loans. We serve a large number of immigrants, and they came to us and realized that the cost to apply for immigration applications is huge. It's $725 to pay for citizenship, just to submit your application. Oftentimes people can't come up with that money off the spot. So what we do is we provide that 0% interest loan. It acts a little differently than the social loan because it's a check directly to the Department of Homeland Security that they can just put on top of their application. So they have that paid off, and then they're participating then in that 0 interest loan to also build their credit. So people are able to pursue credit building opportunities while also paying for their application fees. And we serve a variety of, so naturalization, DACA, green cards, U visas, and more. And then similarly, business loans, we looked at our clients, 30% of which are entrepreneurs or do some of business on the side, made that variety of things. And so we created business loans at 0% interest to be able to help them start their business, formalize their business, and continue to grow their business. Specifically, recently we came out with an LLC loan to cover the costs in California to pay the $800 LLC certification. So really allowing people to grow their business and to formalize in a way to continue to grow. So, as Rob mentioned, we were doing our work in the Mission District and in San Francisco, and someone came to us and said, hey, is this only working because you're working with a predominantly Latino population and they're familiar with this concept? Is it only going to work in the Mission? And we said, we don't think so, but we're not sure. Let's try it out and see how it works in other communities and other areas. So we specifically didn't want to establish Mission Asset Fund brick and mortar offices all across the country. We knew that would never work. And we knew that one of the essential elements for our program was that trust and those relationships with our community. Our community knew all of the people that we work with. And so they were willing to come to us and sign up for a loan, which might have been really scary or that they wouldn't necessarily have access to, or they didn't feel comfortable doing in more mainstream systems. So what we decided to do instead was partner with organizations that already had those relationships with their community and were already offering fantastic services. You've probably heard about all the great work that Peninsula Family Service has done. And we have a network of over 71 nonprofits all across the country that have those really deep ties with their community and are seeing credit building and savings and financial empowerment as a way to continue to support them. So what we do and what my specific role is to support those organizations to bring lending circles to their community so that they can offer this zero interest loan program to continue to build on the strengths of their community as well. So we're in 18 states, including DC, and yeah, really diverse network. It's not just big social service organizations that have financial coaching. We work with organizations that serve Asian refugee populations in Akron, Ohio. We work with organizations that do homeownership programs in Minneapolis, Minnesota. We all across the board. Trying to think of other examples. Texas, Catalyst, Miami, and Miami, obviously. So, and they're each serving really different populations, and I think that's the beauty of lending circles, is it allows for the flexibility to implement it in a variety of different ways, and to help clients who might be coming with different needs to help serve those needs and their financial goals. So, with our network of nonprofit providers, we've since done 12,000 social loans and seen $11 million in loan volume. And so that's not math putting up that money and saying, here, that I think is truly a testament to the community and the small dollar lenders. These small dollar loans, they're anywhere from $300 to $2,400. That is really seen more as a launching pad, and also the goal of building credit and how much credit can open opportunities for people in the financial system. So that's truly a testament to community. And then similarly, we have a 99.3% repayment rate, which if any of you guys work in banking is unheard of. And I think also for financial programs, and this is also a testament to that trust and that community of people and that credit building goal. If people are using the program to try and build credit and come in with that commitment, and it's really about the opportunity to be able to do that. I don't know, I'm trying to remember Peninsula Family Services repayment rate off the top of my head, but it's also up there. Yeah, I think maybe 2 charge-offs, if that.
There've been a few.
Yeah.
Most of our losses have been from 2 people.
Yep. Yeah.
I mean,
And what we do is we try to, so if someone misses a payment, we do our best to try and get them back on track. So rather than other lenders who would say, okay, you missed a payment, great, pay me whatever the fee is, continue on. We really work with clients to be able to support them. So we do everything in our power to avoid reporting them late to the credit bureaus. We are obliged legally to report all payment activity, but we work with folks to get them on payment plans, to do double debits, to really make sure that they get back on track so that the program can best serve them. Yeah.
just wanted to also mention, through this work, and John was mentioned, the 99.3% repayment rate, and these are low-income individuals. So there's a stigma generally out there about low income and they don't pay their debts.
Yep.
Wrong. There was a report that NAF put out last year, the Center of Immigrants. Same kind of perspective. And it said across the board on any measurement, when they look at from a credit point of view on immigrants, way better than the rest of us in this country. So there are lots of misconceptions out there about people who are poor immigrants and so forth and not paying their debt, and it's absolutely incorrect.
Yeah, thank you for that. I think, yeah, we try and highlight that number as much as possible. We have a full research team actually that is publishing. We have this whole pile of data now from being in existence for 12 years, and we're able to, what we're trying to do is look through that data and be able to share the information of what we're seeing in our community and uplift that and uplift the good in people's lives, and building on that to then hopefully kind of sway opinions for other providers, the general public, whatever that might be, to reconsider what they might be thinking about these populations. So with that, I know I just breezed through a lot of information, but would love to take any questions. Yes?
On the business loan, okay, what type of business can you start for $800 to $2,400?
Yeah, so oftentimes people will use the business loans for a variety of things. So that $800, that LLC loan that I was mentioning, that is just to formalize your business. So that's covering where we found that people were interested in formalizing but couldn't cover that $800 license fee for the LLC. So that's what that was for specifically. But we've also seen a lot of folks, these aren't big businesses, oftentimes they're entrepreneurs and it's themselves, and so they're looking to get a little bit of that, just that startup to continue to grow or make that next step or that next jump. We have a variety of clients who maybe oftentimes people will participate in multiple lending circles or multiple loans consecutively, and so kind of continue to build and grow, as well as build that credit component. We have a couple clients, one of which is El Buen Comer in the Mission District. It's a fabulous Mexican restaurant really close to us, so if you ever come say hi. But she is a client of ours who was able to kind of use those lending circles to continue to build. So I think she graduated from a truck to be able to then use that to make the infrastructure, to then it kind of continues to grow. And our CEO is very explicit. We recognize these are really small dollar loans, and we're not trying to be a credit union or a bank, because he feels very strongly there's enough of those in the country and in the world. And so we're in many ways hoping to kind of be that bridge from making what we call the invisible to more visible, to then be able to go on and say, look, I have this history of paying this record, to then go on and say maybe they can take out those 15, 50, whatever amount.
How's your organization funded itself?
Yeah, so we're funded with a lot of philanthropy. Large foundations usually make up the most of our funding to be able to be that person to step in to do that.
Google's giving you a lot of money, right?
They have,
Yes, in the past.
we've a lot of big usually sometimes corporate, other family foundations, variety. Yes.
Help me better understand the lending circle concept.
Yep.
The early slide showed a group of 8 people putting in $100 and then $800. How does that work? Each person has what, $800 credit, or how does that work?
Yeah, great question. So what happens is there will be, so each person puts in $100. So if this was 10 people as opposed to 8 people, then that would be a $1,000 pot, for example. And so the first person in the circle will get that $800. So the rest of this loan is going to act more like a traditional loan that you're familiar with. They get $800 and then they're paying back $100 each month until they get that amount. For the person at the end, it acts more like a savings mechanism. So what they're doing is they're putting in $100 each month, and then we'll get $800 at the end when it's their turn.
So basically, these people, when it's taking out a loan of $800.
Exactly. Yep. It's just how it's self-funded in a way. Yep.
The idea would be that they have some purpose for the loan.
Yeah, so for example, like variety, people come to the lending circles for a variety of different reasons. So oftentimes people want to build credit, I want to buy a car, I want to pay my debt renewal or student loans or school fees or whatever it might be. We don't care what people use the money for. And oftentimes, as I mentioned earlier, it's less about the actual loan. Obviously the loan is great, but it's about building that credit to then say, look, I have a credit history, so when I go take out that auto loan, I'm gonna get a lower rate or whatever. Yeah.
So it's really like a miniature credit union that various organizations have.
Yeah.
Just on a smaller scale. It's basically, you put money in and then other people can borrow from that organization.
Yeah, I think the key difference here is that these are all community members. So a key part of our Lending Circles program is we do a formation event. And so at that formation event, all of the community members are coming together and saying, and agreeing to the terms of their loan. So they're saying, let's do $100. Let's name our lending circle the Bomb Team. I don't know. We have a variety of different names that people come up with. And what we do is we have everyone pick a name out of a hat, and then they can decide. Partners do it potentially differently, and so they'll also share what their financial goals are. And so I think with that, it builds that trust, community building, but then also that accountability of saying, this is what I'm hoping to do. And that's, I think, also the reason we've gotten to that repayment rate we have. Yeah.
Does then each circle end when everybody gets paid?
Yep, so this circle will be, because there are 8 people, it will be 8 months. The loan will then be an 8-month term. If it was 10 people, it would be 10 months. Yeah.
And so August
Yep.
would get $800 and
Yep,
he wouldn't have to pay anything back at all because he's already put in $800.
exactly. Yep, they put in their 800
And
at that point.
in July would have to pay off $100.
In August.
Because they already paid
Yes.
7.
Yes.
Okay.
Yep.
And is it over as soon as that group ends right then, or do they continue putting another 100 in?
So at the end of, so all of these people in the circle's loans would mature in August. That being said, we do have people that would participate in another lending circle, but that would be a new lending circle and a new loan. Yeah.
I just going to give an example. We do the circles, and the circles are 6 to 12 people. 6 because you have to have a loan outstanding for 6 months on your credit report to impact your score. And then it only does 12 because if you did 18 people and you're number 18, it's a year and a half before you get your money back.
Yeah.
So it's 6 to 12 people. And the minimum is $50 to $200, but everybody has to do the same amount. We do $50 because we found even at 100 with a lot of the people we work with, they can't afford $100. So whether it's 50 or 100, what you do is you sign up and say, in this circle, there's 8 people, I sign an agreement that says I'm going to pay $100 in for 8 months. And then the formation night, we actually have one next Thursday.
Oh, wonderful.
For a formation night, is the people, we pull numbers out of the hat, and they can negotiate.
Yeah.
Okay, I got number 1, and Bert got number 8, and Bert needs it sooner, and I can swap places, right? Doesn't matter, depends on what our situation is. And then electronically, because you have to have a checking account, this is why it's 0%, no fees. You have a checking account. On the 17th of the month, it takes the $100 out and puts it into a electronic Pi at math. On the 25th of every month, whoever's turn it is then transferred back to their checking account, for this case, the full $800.
Exactly.
And if you get the $800 up front, it's just like a loan, you pay it off for the 8 months. As Zoe said, if you're in August, the last person here, it's like a savings account. They're saving it for the full term and you get it back. So what's really neat here is what you put in is what you get back. There's no cost. You can use the money however you want, and it's reported to all 3 credit bureaus to build your credit.
And it's entirely automated and almost a no-brainer.
Yeah.
Any financial institution.
They just have that checking account, yes.
So do you arrange for those checking accounts, Lynn, as well, with reduced fees or support?
Yeah, so we ask that all of our clients have a checking account. That sometimes means that we support people to get checking accounts. And we provide folks with a variety of options, kind of what best meets their need. We don't like have a specific relationship with a certain institution that says, hey, go use this. We provide them with options and they can choose what works best for them.
And we do the same thing when somebody comes to us. We have partners that we work with, credit unions and banks, and say, maybe check these guys out.
Right,
And
exactly.
see if you can get that kind of a no-cost deal on your checking account if you don't already have one. But we don't set it up, we
So it's basically to help out the credit score, so they don't get interest, even though they keep the money in there for 8 months and stuff like that, they get this $800 back that they contributed. So it's to help out the credit score and,
Yes, because oftentimes it's, we're reporting all of these payments as positive credit history if they pay them on time. Which oftentimes it's really hard to take on opportunities to build credit because they're usually costly or there's large barriers to entry, or people, if you don't have a score, it's kind of catch-22. It's hard to get credit if you don't have credit.
Right. Yeah. Just want to piggyback on what Rob said about experience with immigrants. Paying back capability. 20 years ago when I came to America as an immigrant, I applied with Citibank for a credit card. Citibank said, we're sorry, we can't give you one because you don't have a credit history. I wrote the CEO and told him, how can I establish a credit history if you're not willing to trust me with my first credit card? Today, I'm happy to say that I'm almost credit free. And when I get these weekly letters from Citibank, would you like to get a credit card? I instantly toss it. I said, hey.
You had your chance, too late.
That's my story.
Thank you for sharing that. I also think that's the beauty of our immigration loans is so it's not only is it paying for that application fee, but it also then enters folks into, that's a 10-month loan, so that they're able to build a positive credit history for the first time for that as well.
Interesting.
You know, I was just reading in Rotary magazine about, all the people who fled in Venezuela and all over the country. And I didn't read more yet. I just saw the graphics. But they were featuring a young woman I think she's in Chicago. But I mean, people like that who have had to flee their country. Many of them, maybe were educated there, maybe had great jobs there, but have to really start over. And I just see that, there's some potential for some great partnerships through Rotary and some of the peacekeeping things that they do, and some of those kinds of things. So just keep our eye out for you.
Yes, please do.
There are a lot of barriers that many of us don't think about in lots of things in life, and financial services is one of them. We grow up, we've got it, and all this kind of stuff. But if you're young, you're an immigrant, you're fleeing, whatever the case happens, to be coming into a new country, the barrier can be extremely high. And then talking about the cost, you mentioned for the immigration documentation, $725, $800.
Yeah.
I was at a seminar yesterday, and they reiterated, which we've probably all heard, over 40% of the households in this country cannot come up with $400 within the next 30 days, or if they do, they have to go into debt to do that. So when you're talking about an $800 loan for somebody who's immigrating here, that's like the world. I mean, it's just, to get them started, this is huge to them to be able to make a difference, or a small business owner to file for an LLC. Zoe, thank you.
Thank you so much.